In this part, I'll show you how much amount of money the new partner has to introduce or will receive from the business. Okay, so this is the partnership account tutorial. In the first tutorial, I showed how to prepare a capital account when a partner retires from the business. Okay, so I recommend you please watch this video, the first tutorial, then you come back here to understand this. Okay, we have a question taken from Cambridge level accounting first paper. Let us have a look at there. So here we see Bipin, Feroz and Neeru have been in partnership account for many years, sharing profit and losses in the ratio of 3:1:2 respectively. Okay, so here Feroz decided to retire from the partnership with effect from 1st January 2022. On this date, the statement of financial position was available. Okay, so here you see this is the statement of financial position and we have some adjustments. So from these things we have already prepared this capital account. Okay, now in the second part we will check how much new partner means Neeru has to introduce. Okay, now what is the requirement here? Let us have a look at the question. So here we see Bipin and Neeru have been agreed the following for the new partnership. Okay, so here number one, they will no longer use current account. Okay, its partner's current account balance is to be transferred to the partner's capital account. Okay, number two, here the opening balances of the capital accounts are to be reflect the new profit and loss sharing ratio. Okay, then we have here Neeru wants to introduce or withdraw funds in order to achieve this. So here our requirement is calculate the amount Neeru should introduce or withdraw from the business. Okay, so here to prepare this account we must need to know the capital account. Okay, because capital account balance will appear here in this account. Okay, so here we calculated capital account. So this side I already rubbed, so other side is left here. So here we have balance PD, means the capital account balance after the retirement of the partner Feroz. Okay, so here capital account balance for Bipin was $81,300 and for Neeru is $56,700. Okay, so let us write here capital account balances. So here we see Bipin $81,300 and Neeru we see here $56,700. Okay, so they decided they will have no longer balance on the current account. Okay, so here we check the current account balance. Before that we write here current account balances. Okay, so to know the current account balance, let us have a look at the question. So here we see the statement of financial position, current account balance. Here Bipin $4,240, Feroz $1,980. It is already taken to the capital account. Then Neeru here $2,750. Okay, so here Bipin amount and Neeru's amount are given. So we will write here in this account. So here Bipin's balance is $4,240 and Neeru's balance is $2,750. Okay, so here business already owes $2,750 to Neeru. Okay, so we will subtract this amount. So already we have this amount in the business. Okay, so now if we add these columns we get here Bipin is $85,540 and Neeru is $53,950. Okay, now here they have equal share. Okay, they will share profit and loss equally, so the balance must be same for these two partners. Okay, now we have to check how much difference. So here 85,540 minus 53,950. Okay, so if we subtract we get here $31,590. Okay, so if Neeru introduce more amount means $31,590, in the business, then it will be equal to the Bipin's capital in the business. Okay, so here we will write $31,590. Okay, so here we will write Niru to introduce. Okay, so this is the amount Niru will introduce in the partnership business to share profit and loss equally.